So let's start by talking about how easy it is to work with banks. I don't know if you all work with large financial institutions or you come from them, but I think it's generally regarded as being very easy to work with banks. David, when you started R3, you got investment from, I believe, 40 banks. We also know how well they work together. Talk to us about how easy it is to work with large financial institutions.
I will do. Before I get started, though, I asked a couple people how it was yesterday, and I'm told that there's a sound issue sometimes. So can everybody hear us in the back? I'm going to try to be loud. We good? Okay, cool. And then I heard it was a little bit boring at times. Sorry, a little bit slow. And that's not going to happen here, I promise. So, I don't know, choosing to work with banks as your career is kind of, I don't know, maybe it's like pulling off one fingernail at a time with a pair of pliers, consistently over the years. They're tough customers, but when you provide value to them, they're amazing. So I won't bore you too much with my career, but I will tell you an interesting story is that I was the CEO of BrokerTech and EBS, which was the largest fixed income and FX exchange, right before I founded R3. And of course, our big customers were banks. And they needed our product. They paid well for our product. And, pick a JP Morgan, we would be billing them $500,000 to $750,000 a month. So when I started R3 and got into the software business, my first conversation was, okay, well, this is going to be an annual upfront. And they were complaining about a couple $100,000. So that was kind of a wake-up call. But of course, it was really early days, and we were in it very early. So listen, I have amazing relationships at the banks. I've worked with them for 40 years, and there's a lot of really good people that want to get stuff done there. As everyone who has worked with the bank knows, there's layers and layers of, CISO, compliance, legal. So you can't just say, hey, that's a really good idea. We can make some money, do that, and go off to the races. So you need to get them to move to something as wildly different as the DeFi space. The value proposition has to be completely overwhelming, and it has to get the attention at the C-suite level, because the guy that loves Solana, and there's a lot of them, and I've talked to them at the various banks that really want to move the needle, need just to check so many boxes. It's really hard for them.
So, we've been saying the institutions are coming. I don't know how many of you here were at the first RWA Summit a couple of years ago and RWA, events of various kinds before that. But, now we're all saying the institutions are here. Is that true? I mean, we have had the CEOs of Citi and Bank of America and others say, they're got stable coins or tokenized deposits on the way. What's the ETA on that?
Hey, I'm not. For 10 years, I've been making really bad predictions about the speed of things. I can speak just for a minute to the fundamental change. DeFi, crypto, stable coins have grown up and matured enough, and there's enough volume there to make it interesting long-term, okay? When we talk about, even us, we talk about we have 17 billion of real world assets on our various core networks. Like, that's really tiny, really, really tiny. But there's enough really creative things going on that we're seeing some of the institutions, driven by a lot of the big asset managers, starting to dip their toes into the space. It is going to accelerate rapidly. One of the things I think is a really interesting discussion is, I love stable coins. They make a ton of sense. But when the regulatory environment is clearer, and it's becoming clearer every day here, especially in the United States, what about a tokenized deposit that can pay you a yield if you already have your money at the bank? I know there's a lot of DeFi folks that are like, screw the banks. they suck. It's all, about the DeFi world. But, how much market share does that take away from stablecoins? One more thing, and then, we'll move on to some other stuff, is that I've been really impressed by when you remove the shackles of financial history, compliance, and regulation, which has actually inhibited me personally. I'm Series 7, 2463. I ran broker dealers. So I see stuff in DeFi all the time. Like, you can't do that. You can't do that. There's no way you can do that. All those guys. But there's been so much creative financial engineering in DeFi. There's enough momentum now. Some of the stuff on the edges is going to go. But I think there's been some amazing thought leadership here, and things are beginning to converge.
So obviously banks need to be responsive to their customers. And I think it's been a really great tailwind to see the success of crypto companies in the public markets. We've had a number of really successful IPOs this summer.
Yeah.
Circle, Gemini, Galaxy, which tokenized their equity on Solana. Bullish, who minted $1 billion of stablecoins with the proceeds of their IPO. You've got Forward Industries, the DAT that came from multi-coin jump, and Galaxy last week raised $1.65 billion in cash, deployed a lot of that on chain. How helpful is that set of publicly traded companies to kind of pull the financial institutions along, and with respect to stablecoins, tokenized deposits, et cetera?
My initial thing is that it's helpful until it's not. Okay, so the thing is that as long as they're able to sustain momentum and the like, it's really good. It's another way to get exposure to this industry. And one of the things, and again, my partner Todd thinks I'm a bit of a Luddite, an old school guy, and all this sort of stuff, but I'm interested in crypto exposure. I'm super impatient, and the way you have to trade it or get exposure now, I know it's really it should be easy, but with everything I have going on, if you work with a private bank, you want to just say, hey, look, I want to look at my portfolio. I want to get a bit of exposure, and I like the exposure to be Solana first by far. Weight that 80%, and then a couple of these other coins you may have heard of: Bitcoin, Ethereum, and the like. So I look at the ETFs, which are been issued and are around the corner. I look at these DAT companies as just another way to, depending on the circumstances of the investor, make it more convenient for them to get exposure. So all in all, a good thing for the industry.
Yeah. And what I was getting at, and I'm going to ask the question another way, is these companies need various services, traditional financial services. They need U.S. bank accounts, et cetera.
Yes.
And a few years ago, choke point 2.0, banks didn't feel comfortable banking crypto companies, even just with deposit accounts. So how has the industry changed in the last 6 months, post-Trump, not just with respect to some of the administrative action legislation with the stablecoin bill, but how important has it been that there's these whole new wave of companies that have gone public that need traditional financial services with billions of dollars that are kind of pulling these institutions forward?
Okay, a couple things. As I made a joke about how painful it is to work with banks, they want your business. Okay. And they weren't like, oh, we hate crypto, we're really threatened by it. It was just that the regulatory position was very, very unclear. And if you talk to, a large global banking institution, getting in the penalty box with the regulators is so painful across the entire organization. It's just not worth it. Obviously, the new structures make it easier for them. But personally, it's not my view. If you, just watch the press, that what the bank regulators are starting to align with the SEC and the CFTC, and have, much more open mind and have removed a lot of the barriers that not only made it dangerous for the banks to do that, but also unprofitable. There's still a disconnect. The U.S. has kind of gone from 0 to 60 so quickly, whereas the rest of the world has been chipping away at these regulations for years and years. There's a misalignment, especially for global banks right now, which has to be sorted out before it's clear sailing.
So let's kind of shift from banks to asset managers and tokenization of equities. You and I were at NASDAQ yesterday together filming Trade Talks. Always great. Last week, Adina, the CEO of NASDAQ, at the All In Summit in LA that we were at, announced that NASDAQ is moving towards tokenizing everything, and they're doing that with DTCC. I know you've got a lot of friends there.
Yes.
What do you think of that direction, and how fast do you think that will happen?
So everybody kind of understands the equity markets. You talk about bond markets, derivatives markets, it gets a little foggy. So tokenization of equities makes perfect sense to me. And the current leaders in the space shouldn't be disadvantaged, should be able to play. So I think we're going to see that begin to happen. Galaxy did their thing last week. I think that's going to accelerate pretty quickly. The other thing is that I also make some equity investments pre-IPO through a company called Forge in the traditional markets, but there's a lot of them that do it. And it's painful and it's inefficient. And I think those young companies, those young promising companies, deserve to have access to the capital more easily. And also those employees who have worked there for 3, 5, 7, or 10 years that are interested in getting some cash to pay off their mortgages have the right to participate in those rounds. So what we need there is the tokenization, for me, is kind of old school. I don't have to talk about the advantages of tokens anymore, or the advantage of the golden record living on chain. I think everybody kind of gets that, move beyond it. So I think tokenization of stock with 24/7 trading, being able to do it very simply on your mobile device and all is coming pretty quickly. It won't be without its fits and starts. And I think the biggest barriers are, the SEC just wrapping their head around, okay, what do consumer protection rules look like under this new regime? And once they do that and we have a normalization, we're off to the races. But the horse is out of the gate and it's running.
I want to key in on something you said, which is really important. A lot of times in this industry, we talk about democratization, tokenization leading to democratization of access to various products, global access to, RWA. I think it's equally important that we talk about democratization of capital formation, because I think that's one of the things that the blockchain really unlocks, is allows any participant anywhere in the world who has a valuable asset to get liquidity for that asset. And so making sure that, we marry these two things is really important. What role do you see investment banks playing in this on-chain future? One of the things that's been surprising to me this year is how you've had a whole kind of set of folks who've been bringing these DATs to market. Cantor, Cohen, Canaccord, many others, because the big guys still aren't playing in the space, the Goldmans and Morgan Stanleys. Who's going to help kind of connect the capital formation with the investors who want to access these products?
Well, I think, markets evolve. So the hungriest of the bankers are going to be there first. We're seeing that now. But listen, the mainstream guys don't want to give up their position either. So I think that's going to change really quickly. And also, those larger investment banks have access to massive pools of capital through their customers, institutional and retail alike. So, they'll be in the game. What we don't know, and that's the tokenization in stocks more generally. And I also believe that's true. If you look, I was down at NYSE floor yesterday before NASDAQ, and it was really fun for me because I used to work on a trading floor. I haven't been down there for many years. And those guys aren't going away. I do think over time, some of those services will A, not be required, and B, you're not going to be able to charge the price for them that you do today. But as long as they're adding value to the process, you're going to see the big guys in there, and they're not going to let that market get away from them.
Yeah, it's incredible. I mean, we've seen some pretty exciting fair launches on the blockchain this year. Pump on Solana raised something like 500 or 600 million in like 15 minutes at a multiple billion-dollar valuation. So I do think there's new ways of capital formation and democratization of that on chain. So I didn't want this fireside chat. Go ahead.
No, Nick. One of the things I find interesting, we were getting mic'd up in the back. And the gentleman told me that I was the moderator and I was going to get some different kind of mic. I had no idea. Okay. So then we get out here on stage and he's asking me all the questions. I think most of these people are really interested in what's going on with Solana. So I'm going to turn it on you. And we don't have a lot of time, but I know you can speak very quickly. Solana is having an amazing run. Now, most people in the audience know that it's completely correlated to the R3 announcement a few months ago. But you do have some other things going on. So tell us about it. I mean, there's a lot. And the other thing I'll admit to you guys is that, I've come from a traditional background. I'm like drinking from the fire hose of DeFi. Every time I meet with Nick, he's like, oh yeah, in the last 24 hours, we've had these 15 things go on. And 30% of what he's talking about, I have no idea. So tell us, Nick.
Yeah, so Toli's founding vision for Solana, as some of you may know, was on-chain NASDAQ at the speed of light. Incredible how far we've come, but it's still very, very early. But some interesting things that you may or may not know. Year to date, $2.5 trillion of value has been transacted on the Solana network. 80 million monthly active users of the network. It's 1% of the world's population, so we still have 99% more to go, but I think we're making good progress there. And I think increasingly it's seen as not just a retail blockchain, but an institutional one. Jenny Johnson, the CEO of Franklin Templeton, recently published a blog post where she called Solana kind of among the first institutional blockchains. But I want to bring it back to you, which is you've been building on private blockchains, for a decade. Why public blockchains now, and why Solana from your perspective? Obviously, you had a lot of choice as to where you took your business. Why did you choose to?
Yeah, really quickly. So we made the decision for a number of reasons that public chains had grown up enough. We could get the finality we needed. There's some privacy tools being developed, and we were, and I asked my team, I'm like, go out and take a look at it. And by the way, it has to be EVM because that's where all of our customers have built. So the group goes out and we talked about 14 different organizations in total, and they came back and they're like, Solana. And I'm like, which part of the instruction did you not understand type thing? That's something called SVM. I don't really know what that means, but it's not EVM. So anyway, really quickly, like Solana has the ingredients that our customers need. We talked about the speed and the transaction throughput. You're now below a second for settlement finality. You have a massive ecosystem. But most importantly, which is not talked enough about, and I really admire the EVM ecosystem, but it's dozens of ecosystems. There's a bunch of layer twos and there are a bunch of side chains. And we started with this panel about how hard it is to get banks to do anything. So if you're a bank and you're going to go into the EVM world, you're going to pick a side chain. And then you're going to depend on an interoperability company to move your assets into other EVM compatible things. That's going to do the CISO and the compliance heads in. Legal is going to have to review it. So my team came in and said, Rutter, it's overwhelming evidence. Solana's going to win. And we know the best tech doesn't always win, but they have the ecosystem. They have the momentum. You hook up to one thing and you get everything in that ecosystem. And I'm like, okay, guys, I'm in. Then I met you and Lily and I thought, they're not bad guys. So we're all in on Solana. And I really do think that when it comes to real world assets, this audience should think about that. The kind of, monolith, the one market that Solana has is a huge advantage for their ecosystem in the future, and we believe in it. So,
awesome.
Nick, great job turning it on, all the questions on me.
Well, you heard it first. We're not bad guys. Come say hello if you want to learn more about what R3 is doing, which is incredible, or Solana, we're always here to help, and so grateful that you chose to start your morning with us here today, and excited for the rest of the content. Thank you so much.
Thank you, guys.